In this video, I am going to walk through an example of using cash basis accounting versus using accrual accounting for the same example. This example is very simplistic, but I think it helps to illustrate the difference between the two bases of accounting. Let's say we have a lawn mowing service. The lawn mowing service collects $600 cash in May for mowing to be performed in June, July, and August. The lawn mowing service pays $50 per month in June, July, and August to rent the mower. These are the lawn mowing services revenues and expenses, the $600 of revenue that it will earn, and then the $50 of expense each month that it has to rent that mower. Using the cash basis of accounting, the lawn mowing service would recognize $600 of revenue in May. Then it would recognize $50 of expense in June, $50 of expense in July, and $50 of expense in August. Therefore, its financial statements would show that May had net income of $600, and June, July, and August would each have a net loss of $50. This cash basis accounting misses a couple things here. First of all, the lawn mowing service did not earn the $600 in May. In May, the lawn mowing service actually had a liability. If it didn't mow the lawns in June, July, and August, it would have to pay the $600 back. Let's move on and redo the same set of facts using accrual basis accounting. Using accrual basis accounting, that $600 collected in May would be recorded as a liability called unearned revenue. Then the $600 would be split up over the 3 months that it was actually earned. So we would have $600 divided by 3 months, or $200 per month. In June, then, the lawn mowing service would recognize $200 of revenue, less the $50 expense for renting the mower to give it $150 of net income in June. It would have the same net income in July and the same net income in August as well. The revenue that it earns is recognized over the period of time that it actually does the lawn mowing. Overall, it would show net income in May of 0 because it didn't perform any services in May. In June, July, and August, it would show $150 of net income in each month. Accrual basis accounting will represent economic reality much better than cash basis accounting. Accrual accounting, since it represents economic reality much better than cash basis accounting, is required for financial statements for all but the smallest of companies. If you're a publicly held company, you will be using accrual basis accounting. Let me restate. Accrual accounting is required under U.S. GAAP for all publicly held companies. We will be using accrual accounting throughout this course unless otherwise stated. That concludes the step-by-step walkthrough of the difference between cash basis accounting and accrual accounting. Have a great day.